Hey folks, it's Tony here from Rebel Financial. Thanks for joining me. Today is Friday, the first Friday after the end of the tax season. So kudos to everybody who's taking care of their taxes or if they're working on them as well. There is a large backlog at the IRS, even from 2019 still. So don't be surprised. It's been an odd couple of years. But really what I'm here to do is update people on what currently is going on. I'm going to talk about the child tax credit, student loans, a little bit about capital gains, but also give an update on what the IRS is doing. So as always, though, if you enjoy this video, we'd appreciate it, if you do the like button below. Our marketing people work really hard to make these things happen. Also, we do have a monthly newsletter. And so there's a link below if you want to get that. We try not to bombard people with things, but that's a useful letter for most people. So take a look at that. So the first thing I'm going to show people here is this information. I want to talk about student loans is from, you could see this from the New York Reserve Federal Bank of New York, okay? So this comes out quarterly. It's a great report. But really what I want to show you, this is about student loans. Specifically, I like showing this graph because this is today. This is about, the red is student loans, okay? This is mortgage, and then you'll see auto loan here, credit card debt. So it's pretty interesting, but it shows 1.7 trillion of student loan debt. See where that was 20 years ago? That wasn't much of anything. And now when we look in 2021, it's grown an increasing amount. So this is just incredible growth from where it was even back then. So the point I'm making is it is a huge, overwhelming number for a lot of people. Not much of an update in terms of anything concrete in terms of what the government is doing. As I've said before, I think there's a really good chance that at least 10,000 will be forgiven. 50,000 would be at the high end. I don't think it would be much more than that. So we will see. I say that I was more confident, I think, a couple months ago, but this just doesn't seem to have a lot of momentum right now. So we'll see what happens. Maybe it's just that we're hearing about other things more than this. So that could be very well, why this has kind of been pushed to the back burner, okay? So one of those pieces of legislation that is being talked about more right now is the advanced child tax credits for 2021. So a couple things you need to be cognizant of. 2021 was a bump in how much the credit is worth. Prior to this year, it was worth $2,000. With incomes for married filing jointly 150 below, and then criteria is following that, like 75 below if you're single. But this year, in this year alone, as of now, it was bumped to 3,600 for children below 6, and then from children between 6 and 17, it goes to $3,000. And that 17, by the way, is even if your child turns 17 this year, they do qualify, okay? If they turn 17 before this year, they do not qualify, all right? So you can see here I highlighted some things, including that rule alone. So I thought this was going to be a permanent change. I did not realize that it is only this year. Those payments that are going to start in July, based on the fractional amount, 1/12 of the amounts that you qualify from previous taxes, either 19 or 20, is what you're going to start to receive, if you have children and meet the income phases. It's only going to be through this July through September. It's somewhat of a test. I don't know that it'll keep going after that, but we'll see how well received it is. So because it's going to be for 6 months, it's going to equate to 50% of the tax credit. And the rest of that, just like in previous years, you will capture back on your 2021 taxes. So that is how it's going to look. It is not permanent. I found it, they always spend a lot of time coming up with a name, so I always like to give them credit for the name. Here it is, the American Rescue Plan Act, ARPA. I don't think they spent nearly as much on that name as they have on many others. So it also talks about earned income. One of the holdups with the IRS is that a lot of things they're doing are manual because of the quirks that have changed in laws, including the earned income tax credit. You could look at different years to qualify for 2020, and that has to be done manually, so it's taking a little bit of time, okay? So that's that. Those are really the two biggest ones that I know right now people are concerned about. But let me also talk a little bit and explain capital taxes, okay? Because we hear a lot about this, but really it affects a lot less people, especially the numbers they're talking about, than most folks realize. So capital gains, if you invest in something and hold on to it for a year or less, that's going to be a short-term capital gain. Above that, it's going to be a long-term capital gain. If you have a short-term capital gain, that looks just like your ordinary income, okay? It's always taxed the same. But if you do it for over a year, the long-term has different rates. It could be 0, it could be 15, it could be 20. And then there could be an additional surplus for the Affordable Care Act. What the Biden administration and some in Congress are talking about is increasing that for people over $1 million, all right? So we're already talking about a fraction of the people. So your income would have to be that high. And then it would look like your ordinary income. You would not get those special breaks that you currently get now. So it'll be interesting how this looks in the end. But when people hear this, they get excited about it, but it is not going to affect most people. It is going to be a fraction. I'm not saying it's right or wrong. I'm just letting you know that it's nothing that you need to get worried about, okay? In most capital gains, I know we have a trading frenzy, whether it's Dogecoin or GameStop or some other ones. Currently, we have a lot of those right now, but for the most part, people are holding on to those for the long term, okay? So that's a little bit about that. I want to finish up by talking about the IRS. As I talked earlier, there is a big backlog. They still have like 350,000 returns from 2019. The tax year 2019 that they haven't completed yet. So they are still working on those. Then there's another huge backlog still for this year. If you've had a pretty routine return, you're probably not affected by this delay. But aside from this, then amended taxes or extended taxes, all those get delayed. I know somebody who did an amended return last summer, like in July, and just a week ago, they finally got the return from that. So those were over like 6 months long. So be patient. It's a different year. It's a different time. But because of all this backlog, the administration is also proposing to reverse a trend. The trend has been to scale back on the IRS. Wealthy people don't want the IRS too much in their business. The people that are affected by the scale back IRS are really common people because our returns are simple enough that a computer can check them. But they need manpower to be able to check the bigger returns. So the proposal is for like $70 billion, double the size of IRS agents. And the projected return on that would be $800 billion. So a big return for what they'd be willing to spend on that. We'll see. What I read, it does have some bipartisan support. It has to have that really to get passed. But I think you could see more movement on that in the coming months, okay? But anyway, just to reiterate, thank you again. Today is going to be like summer out there, so hopefully you get out and spend some time outside. And if you do have any questions or comments, put them below. Otherwise, feel free to reach out to us at any time as well, okay? Thanks, and have a great weekend.